Bitcoin halving cycles line up with election years, because you have this supply inflation shock to the network every 210,000 blocks, which lines up with these election years, and you have some beautiful magic that can culminate. And I think particularly this election cycle, because 15 years in, $1.4 trillion market cap, it's impossible to ignore Bitcoin. And so
that's right.
Watching it be pushed to the fore of the conversation leading up to the presidential elections, like, holy crap, how did we get here?
I guess Satoshi really understood this dynamic. I'm kidding. I'm not sure if he or it or they, thought about that. But there is something called, in equity markets, actually, it's the first project I ever did when I got into the business. No, this would have been the first more economics, political project I did, because the first one was about Hong Kong, 1997, but was this 4-year election cycle and how the equity markets trade around the election cycle. And so I pretended that the 4 years were the equivalent of 1 year, and applied seasonal adjustment, the census at the time it was X11, to it to find out the seasonality. And there definitely is, quote unquote, seasonality around the 4-year presidential election cycle.
Does it trend in favor of one party over the other, or is it really dependent on the individual?
No, it didn't. It has more to do with the dynamics around election. So in the 4th year, as the election is approaching, usually we have a good market, because now this year, I think, is not so much what I'm talking about. A lot of things are different this year, but typically the 4th year is where, what the incumbent administration, which usually has the power of the purse, basically throws as much at the economy and at consumer sentiment as possible, which they are trying to do, but consumer sentiment is terrible this year, but normally it's very good. And then in the 1st year, they really understand, okay, now we're going to have to administer the tough medicine, hope that it takes before the midterm elections, and hope that we've turned around from taking whatever tough medicine needs to be put in place. And so it depends on the party what the tough medicine is very often. But that's what usually happens first year of a presidential cycle. Is the 1st and 2nd years are a little tough. 3rd and 4th years are pretty good.
And yeah, you mentioned it before we hit record and alluded to it again, but this seems like an anomalous year in terms of that trend.
Yes, I mean, while technically the stock indices are up, what we're seeing is amazing concentration, record-breaking concentration. So I looked at a chart that Goldman Sachs did a month or so ago, and it showed the ratio of the market cap of the highest valued stock in the S&P 500 compared to the market cap of the stock at the 75th percentile, so the top stock in the bottom 25%. It is higher now than it's ever been. This went back before the Depression of the 1900s, 1920s, and it is worse than it was back then. So what's happening? What was happening in the Depression? In the Depression, most people were wiped out, right? Those who stayed in the stock market were, they were crowding into names that they knew wouldn't go bankrupt, and therefore had, they had balance sheets like Fort Knox, right? And literally in the day it probably was gold. So, and so there was huge crowding in, and we're higher now than we were back then. But the good news for us, because we've been hammered in this environment, the good news is as a market broadens out, let's say as the risks abate, and I think that will come with lower interest rates. Fed's a big problem, right? then the broadening out of the market advantages, small, mid, and, the lower end of large cap stocks relative to the mega caps, because there has been so much crowding in. And I think that's going to happen this time as well. The other crowding in occurs right before we're going into a horrible bear market. So we're either going into a market that's going to broaden out and be a very good, strong market, or this is what the concentration tells us. Or, as in 1973 and 2000, we're going into a bear market, a bad bear market. I'm opting for the former. I think we're getting all kinds of signals that interest rates are way too high, and the headline economic numbers, the headline inflation numbers, especially when it comes to shelter and so forth, are hugely lagging. And so I think the Fed's overdoing it now. And we've seen a rolling recession, housing down, autos very weak, commercial real estate in a world of hurt, office for obvious reasons, but now multifamily because too much overbuilding. And now the consumer seems to be cracking, certainly at the edges. Low income is definitely. If you look at consumer sentiment today, it is lower for low income and middle income earners, or as low as it was in 08, 09. And the higher income consumer is now starting to capitulate in terms of sentiment. Now, I know we got, this is based on the University of Michigan Consumer Sentiment Index. Yesterday we got Conference Board, and it said confidence was up. Over the many years I've been in the business, Michigan has been the right leading indicator.
And that was down way below
it was
target
shocking
last month. Right?
Shocking. And just one, sorry, okay. Marty. If you look at small business sentiment, so the NFIB, National Federation of Independent Business, puts out a survey. I know the person who started it in the late 70s. It is as low now as it was near the lows in 08, 09. It's because small businesses cannot get funding. No. They cannot. And many bigger companies can't as well because venture, except for AI, is basically shut.
Hey, do you still have your Bitcoin on an exchange? Don't hold your Bitcoin on an exchange. Take it into self-custody. If you're looking for an easy way to do that, we have the BitKey. BitKey is Bitcoin made easy to use and hard to lose. Take the first step. Get your Bitcoin off the exchange. Check out the link in the show notes. That'll get you 20% off your BitKey, or use the code TFTC20 at checkout.